I am not a financial advisor, and I never give financial advice on this channel. 100% of this content is for entertainment purposes only. Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today I'm going to be going over some XRP charts, as it was quite an eventful weekend with the events that had occurred, taking the crypto market down considerably from the levels that we saw over the last couple weeks, even though we're not seeing that necessarily translate into the stock market, which is a very telling thing, which goes to show you exactly how much the market makers, the institutions, the hedge funds, etc. take advantage of the crypto markets on the weekends in regards to the low liquidity and the low volume, as well as the timing. If you think about the fact that this occurred on a Saturday when most people were out enjoying their hobbies or hanging out with the family, the last thing they were doing was watching the crypto markets. So this drop occurred at a time when very few people were in a situation to do anything about it other than rely on their stop losses. And there's a reason why they do these things exactly when they do them. And the fact that the stock market is not responding in like kind really goes to show you the extent to which these people will go to take your bags, essentially using fear as a weapon. So let's not waste any more time and let's get into the charts. First off, taking a look at the XRP 4-hour chart, you can see that price traded up here towards the equilibrium zone before pulling back, coming back below the Gaussian channel, forming this bearish order block right here. Price then pulled down to where we had this massive collapse right in this area here. Price first wicked down into the liquidity zone, falling below this lower trend line, then broke below the weekly trend line, coming down here and actually taking out my weak doji reverse waterfall target right here at the 192 area, which, if you've watched my previous material, was my target for the reverse dragon pattern that I had talked about many weeks ago, hitting that level nearly perfectly. I will show that chart in just a minute. Now this weekly trend line is the previous one that has been broken. Now that those levels have been reestablished by the movement that we saw over the weekend, I have now adjusted those on my main weekly chart to reflect the new price action. Overall, we are getting quite a bit of weakness right here in this area, as you can see these dojis piling up, as well as what seems to be a slight rejection out of this bearish SIBI. You want to stay mindful because any one of these 4 bearish SIBIs could act as resistance. With this one here previously rejecting price, and this one here previously rejecting price, this one that we're currently at rejecting price, there's a good chance that either one of these 3, be it the bottom, the second to the bottom, or the top, could all act as breaker blocks. Doesn't mean that they have to, but they very well could. And if they do act as a breaker block, rejecting price off of them, we could see price come back down into the liquidity zone, perhaps down to this bullish order block right here, which starts right around that 189.8 level. And there's definitely some liquidity resting in this area. Remember, the algorithm runs on efficiency first and foremost. So now that the algorithm is back running the show, we very well could see it come down into this area in an attempt to grab more liquidity. But what you saw right here, this was not the algorithm. This was manual intervention. Likely the combination of institutions and hedge funds coordinating their efforts simultaneously when people were least likely to be able to react to it, while at the same time the algorithm was flipped over to manual intervention so that the combination became deadly, pushing price down to these levels. Now that enough fear has been generated into the market, they likely won't have to use the manual intervention or the price manipulation if they want to take the prices lower. Because all they would have to do is start bringing the prices down in this direction, and people are just going to start panic selling whatever they have left. Many people have already panic sold at this point, which may or may not have been the best decision at that point, but we will find out within the coming days. We also have a strong bullish divergence right here on the daily chart that is forming between current price and the stochastic which may signal a potential reversal from this lower point sitting at around that 190.5 range, just above this bullish order block. That remains to be seen at this point, but when looking at this from the daily perspective, it's very interesting that we're forming this doji right here, which shows a nice point of indecision. This means that both the bulls and the bears are just kind of sitting there on the edge of their chair with their finger over the button, but they're not quite willing to hit that button yet. Now moving over and taking a look at the XRP Weekly Chart. We have now set this lower low here from the previous point where the trend line was resting right here. So this could essentially be moved over to this area. But I still think it's very likely that we're going to see this play out in this particular manner. And seeing these moves pushing to the downside as the market makers and institutions are working so hard to scare you out of the market, they are doing so for a reason. Now what that reason is, we still don't know. But as we saw in the daily chart, we're also seeing a weak doji start off for the new weekly candle, which could potentially be showing a reversal, as there is a lot of liquidity resting up in this area right here in the 235-240 range, which I will show you on the heat map here in just a moment. But looking at it, the bullish order block on the weekly is still holding, even though price has now penetrated down with the body of this candle past the 50% mark, wicking down to the point of this bullish order block on the daily. But nonetheless, we still have two bullish order blocks stacked on top of each other, both of which are trading within this bullish BISI right here, which has its bottom resting at about that $62.7 range, which also have a small bullish order block on the 4-hour down here, centered about that $1.45 range. If you go to the daily chart, there's actually a fair value gap right here in that 150 range that a lot of people have been talking about, but the fair value gap isn't what's important. Even though there's sparse liquidity down in these ranges, and even though the algorithm is drawn to the fair value gap because one of its main responsibilities is to correct inefficiencies, it would likely break through that fair value gap coming down to this bullish order block because it's going to need this liquidity right here, and this would likely be the area where we would see the reversal, being somewhere in that $1.45.5 range, which subsequently is where my last remaining limit buy order is sitting at about $1.48. And another thing to pay attention to is overall, the volume is still continuing to trend downwards, with the exception of this move we saw this week, which finally poked its head out right here with a bearish volume candle, gaining a little bit of momentum. But overall, this is what we want to see with the volume in regards to seeing a breakout of this bullish wedge pattern, which I still believe is about 70 to 75% bullish, versus 25 to 30% bearish. Overall, I do believe that this pattern is still going to take us to higher levels. Even though many people are saying we're in a bear market, I do not believe that. I believe we are still in a bull market. But what we are seeing here, with most of the altcoins being incredibly depressed, is not being caused by a bear market. It's simply just a matter of Bitcoin dominance. Between Bitcoin and Ethereum going on these incredible runs that they've seen, a lot of the liquidity is resting within those two cryptocurrencies, which has made liquidity very sparse for the altcoins, causing lots of money to come out of them and to chase potential profits within those two cryptocurrencies. That doesn't mean that we're in a bear market. It just means that traders and investors alike are putting their money where they think it's going to gain them the most profit. And at some point, when the dominance starts to retreat, you're going to see the exact opposite occur. With Bitcoin and Ethereum coming downwards, I believe the Bitcoin drop is going to be absolutely catastrophic for many investors, but all that money is going to bleed into the altcoins, especially the ISO 222 tokens, which is going to cause them to have a monumental rise. For additional information and exclusive perks, do consider joining me on Patreon. Now, taking a look at my original reverse dragon pattern chart that I originally used when I first released this information to the public, I had this flash crash marker right here, which I said would likely start to mark the area which we started to see the downtrend into the formation of the head. We didn't quite get to that point, but very close. I said originally it'd be somewhere between the equilibrium line, this green line here, and the flash crash marker, which is exactly where it went. Price then fell back down, has crossed below this shadow line a few times, which is marked off of the Trump tweet pump right here. Price is now trading down below the Gaussian channel on this chart. And originally, my target was marked out at this weak doji right here, right at the top, which is right where I set my limit buy order that got filled yesterday. And if you look at the charts, you can see that it did come down to that exact point. It did take quite some time for this to play out, but that was originally the target I was looking at, which was likely a sign of where the price would reverse to the upside. That doesn't mean that that's the end. We very well could come down here to about this 183, 184 level because there is liquidity resting down in this area. Now this is one of the original charts that I posted, and as you can see, I measured it out off of this point here with this candle doing something very similar, coming down to that weak doji area off of that bottom candle, which is the same setup that we see on this chart here. Now this hasn't been updated for quite some time. I've just been holding on to it as a reference. But you can see that price basically came up here, fell down to these levels where we're at down here, doing exactly what we have seen in this chart here, which was my original diagram, coming right to this weak doji. And when you look at the chart here, you can see the exact same type of a candle formation right here, marked at the very top that we just touched, which marks that 192 range nearly perfectly. We're also forming this weak doji here, which could be signaling a move to the upside. And if you take a look at this chart, oftentimes, not every time, but if you come off of the high point, going through the Gaussian channel to the downside, marking the point on the chart where price ultimately fell through the center line, putting the red center line of your measuring tool right in that area. This will give you a good idea of the split of the 50-50 coming between the two, which can help you determine approximately the area of which the low range is going to be, because a lot of times we'll see what happens above happens below. It's not always perfect, but it's a good way to get a general idea of the sense. Being that this broke through overall, this is the point we would want to mark off of, is right in this area, a nice average. And so far it's played pretty close to this, but the other thing you have to keep in mind is the drama going on in the Middle East likely isn't over. But overall, the reverse dragon pattern did play out exactly as I had expected thus far. Now, if we'll see a move to the upside at this point, it's hard to say because of the events that we're seeing. Now taking a look at the XRP Heatmap, this is the 1 month. You can see that the thickest band of liquidity on the entire chart stands out like a sore thumb, resting up here at that 233, all the way up here to about that 245 level, which on the weekly chart, this area would be the area just above the upper trend line. Liquidity is getting fairly thin down in this area below the previous low, but there still is quite a bit of liquidity resting down in this area. You can also see that we're starting to get a lot of stop losses. A lot of new orders are piling up in this area here now that we've seen this move to the downside. Switching over to the 2-week, it makes it a little bit easier to see. But you can see that there is an incredible amount of liquidity resting up here. Billions and billions of dollars of liquidity moving all the way up into that area, that 240 plus. Liquidity below current price, although there is still a considerable amount of liquidity in certain areas, especially below this previous low, resting right here at about that 189 level, going down to about that 187. There is a little band of liquidity right here in this area still remaining. But overall, liquidity in this area is starting to get much thinner than what we are seeing up above. So it's very likely that at some point we're going to switch from a sell model where the algorithm is seeking after sell-side liquidity to flipping over to a buy model, which will start to seek after the buy-side liquidity. And there is a considerable amount of liquidity up here and up here that the algorithm will likely start to seek after. So taking a look at the XRP cumulative charts, you can see right here the red arrow is current price. There is still a pretty good amount of liquidity resting in that previous area below in the long liquidation leverage area that price very well could attempt to chase down. As once we came down to this 192 level, a lot of long positions opened in this area between current price and about that 190 range. But you can see, as I was talking before, moving down into that about $1.80 range, that the liquidity starts to get very thin down here. But if we do see a downturn in price moving to lower prices, it's likely that it will go somewhere into about that 185, 188 range before we see the reversal. As most of the short range liquidity that we can see here on the chart is basically running up to about that 212 area, with most of the liquidity, which I showed on the heat map, being off of this chart way over here into this range. So in order to get to that, price would have to come up through this area, moving up into about that 225 to that 245 range, which, as I said on my weekly chart, puts us in this range of right about the COPD line being in about that 230 range, moving up here into the 245 range, which would put us just outside of this upper trend line, which is what we are going to want to see moving forward. We're going to want to see price break through this, which would be a bullish sign, possibly retesting off of it and moving to the upside. Now, the XRP breakout chart has been telling us that the breakout would occur in June, but it seems very likely to me that that might be off the table because of some of the events that we're currently seeing going on in the Middle East, which over the weekend not only took out my 205 to 207 price cap range, but also came down here taking out the worst case scenario line. And as I mentioned in previous videos, in the event of a black swan, those levels would flat just be off at the table, which I would consider what we saw this weekend, dropping 3 you-know-whats, you-know-where, which is basically all it took by coordinating an effort in order to generate fear to get the price to move considerably lower so that that liquidity could be sopped up by the market makers, the hedge funds, the institutions, basically leaving retail sitting on the sidelines, either broke because they got liquidated, sitting in cash because their stop losses got hit, and at this point likely having more fear of more of a potential move to the downside than any kind of excitement for potential to move to the upside, which is exactly what they want to do, which is exactly why they do what they do. Much like a bag porter, when you go to a hotel, they want your bags. That's how they take your liquidity from you and put it in their wallets so that they can benefit from it while you watch from the sidelines, being only willing to sell it to you once they are taking profit using you for exit liquidity. And never forget that fear is a much stronger emotion than greed. People will do things when they're afraid that will boggle the mind, which is why they always push fear. Don't let them get the best of you. But at the same time, do not needlessly put yourself in harm's way. It's a delicate balance. So thank you so much for watching. I appreciate each and every single one of you. Have a great day.